Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And today, as every weekend, I want to give you my weekly update on my real money portfolio for week 39 of 2021. But before we start, don't forget to subscribe, ring the notification bell, and you will never miss another video, and you will get full insight to my real money portfolio every week. Thank you. So I started this portfolio at the 2nd of December 2019, and since then my portfolio have a performance of 59.7%, which is an outperformance of around 20% to the S&P 500 over the same time span and a lot more to the Dow Jones Industrial Average. And in this video I will go through the transactions that received dividends and the performance overall in the last week. First of all, take a look at the transactions of last week, and that's very fast because I didn't do anything. I didn't board, I didn't sold. I just stick with my positions. But then I received some dividends last week. Start with Jack Henry. Jack Henry paid me $5.86. And Jack Henry is quite a small position in my portfolio. I have 15 shares of Jack Henry, and this whole position is up 11.19%. Jack Henry was one of the first stocks in my portfolio I bought at the 2nd of December 2019, just right away when I started this portfolio, and then added a little bit at the end of May 2020 and also in February 21. And overall, I'm very happy with Jack Henry, a very profitable, very good business. A little bit pricey, I would say, but I will stick with it for the long term. And by the way, Jack Henry, one of the best performer in the last decade. Second of all, Coca-Cola paid me $17.85 of dividends last week. And Coca-Cola, I bought my first position, or the main position of my 50 shares on March 23, 2020, just right in the corona pandemic crash, then just reinvested the received dividends a little bit here, a little bit there. And so overall, I have 50 shares of Coca-Cola in my portfolio for a purchase average price of $38.73. And so my whole position is up 42%. And also with Coca-Cola, it looked already a little bit pricey, but I will stick with the position just for the long term. Coca-Cola is still a great business, a good dividend payer, so no need to worry, no need to sell. Next up is Allstate, the big insurance company, and they paid me $26.85 of dividends also last week. And I have 39 shares of Allstate in my portfolio, and the whole position is up 4.99%. I bought the majority of my shares in April 2021 and then added a little bit at the start and the end of June 2021. And also Allstate, a very solid, profitable business. Not very spectacular, but a good dividend payer. And so I will hold it also for the long term. I think this will be a good investment, maybe not with extraordinary returns, but with a solid return over the long term. And last but not least, Imperial Oil, my Canadian oil stock, paid me $28.64 last week of dividends. My whole position now is up 120.6% and is the best performing stock in my portfolio. I bought the majority of my shares in May 2020 and then added here and there and bought a little bit more last year in July and September. And so overall I have now 158 shares of Imperial Oil with an average purchase price of $15.10. And so this is quite good. And as I mentioned in some other videos before, my plan is to stick with Imperial Oil, which belongs to the oil price, of course, a lot. And when the oil price will go over $80 and stable over $80, then maybe it's time to sell for me my Imperial Oil stocks, because the oil price and the oil industry is just a cyclic business. And so when the oil price is back to over $80, it's maybe a good moment to cut this position And so it's likely that in the next few days, weeks, I will sell this position and just made a good trade. And of course, when the cycle then maybe come back and the oil prices are very low again or even negative, like we saw it in 2020, then maybe it's time to buy back. But that's the plan overall, and we will see how this will work out. And so with these received dividends, overall I received $935.36 in 2021 of dividends. And here you can see what I get from what company. Some of these holdings I don't have anymore. Overall, almost $1,000 so far. Then, because it was the start of the month and I got paid, I also was able to deposit a little bit more. And so I deposited $750 to my portfolio. And so the value of the whole portfolio is $120,693. And so I try to add every month a little bit, normally a little bit more, but okay, last month was a little bit expensive for some personal reasons. And so I was able to put there $750. Then take a look at the performance. First of all, take a look at the whole pie of my portfolio, and then you see that Intel is still the biggest position, followed by Berkshire, MI Homes, and Tencent. And then I have also 21.31% of cash. And when you follow me for a while, I always said that I want to stay with around 20% of cash, because overall we are in a high valuated market, and sooner or later we will have a bigger correction or crash, and then of course I will invest also this 20%. But for now I'm just happy when I'm around 20%. And so to come back to 20%, I will try to invest in the next few days these 1.3% or around of that. The question is, what should I buy then? Just to make rational decisions, I made a table with all the holdings in my portfolio where you can see the current price, my buy price, my calculated intrinsic value, and the distance to this intrinsic value. When I just go through this table, then of course I would buy more of Alibaba, MI Homes, and Tencent. But because my positions are already quite big in these holdings, I really think about to add a little bit more to Universal Health, UHS, which also came back in the last few weeks a little bit, because my current position in Universal Health is not that big. It's my second smallest position. Maybe I will use these cheap prices just to add a little bit more of this great company. Another chance would be also Baidu, which is also way undervalued, still way undervalued, and I would also like to add a little bit more of Baidu. So I think it will be a decision between both of them. And next to that, it's very, very difficult to find great companies, or at least good companies, for reasonable prices. And so I will just add to my positions because these are the companies I know the best. Next, let's take a look at the current holdings and the performance overall of these companies. As I said, Imperial Oil is the best performing stock in my portfolio with 120.6%, followed by JP Morgan, Bank of Nova Scotia, Ledger & Platt, and so on. And at the end of the list, Alibaba and Tencent, my two Chinese companies, deep red, deep in the minus, but I will stick with it just because both are great companies, and of course there are big problems, there are big trouble in China right now with Evergrande, the regulation of the Communist Party and the uncertainty of that, but overall and in the long term I think Tencent and Alibaba will be fine, and also the stock price will recover. No need to panic, I just stick with my positions right now. And for the people who are new to my channel and wonder how I come to my overall performance since the start of this portfolio, here also a view on the closed trades already. And then you see I had some really good trades with Caterpillar, Walt Disney, Stamps, and so on. And so overall, very good, very nice so far. And with that, as I said, I come to the performance of 59.7% since the start of this portfolio 22 months ago. And if you want to follow me on this road, and if you like this full insight, the full transparency on this portfolio, then just subscribe, ring the notification bell. Don't forget to give me a big thumbs up for this video. This helps the YouTube algorithm and my little channel so much. Then you can follow me on my road as a long-term value investor to financial freedom. That's it for today. Thanks for watching. See you the next time. Take care. Bye bye.